For joining us. There we go. Joey, do it one of two ways. Either you can introduce yourself and talk about what you're doing, and we always go around the room and have all the attendees introduce him and herself as well. So do you want to know who's in the room first, or do you want to introduce
yourself? Let's go with everybody else. They're more important than I am.
Okay. So I always go by the list, and sorry about that. So David Robeson.
Hi, I'm David. I'm working in Baltimore with another co-founder. We're developing a tool for mathematics students and teachers called Spiral Math.
Oh, thank you. Sam just finished his latest crowdfunder. So how are you, Sam? And tell us what you're doing and how the
I would be remiss if I didn't thank you for helping me promote it. It went incredibly well. And also Chand, who's on the call, thank you for investing. I really appreciate it. So we ended up at 405,000 on Republic, and which is just an awesome thing. And this is our second equity crowdfund, and those two rounds have basically helped keep my company independent over the last year. We would have sold out if we had not gotten those. So it's really great. And what we do is software for video teams. So our software is used by people like Madison Square Garden, various political campaigns, universities, large corporates, and broadcasters. Basically anybody who has lots of video, they need to search and manage it. And generally they have remote teams. So our software is like a platform for doing that. Anyway, we can get into that if it's of interest to anybody, but great to meet everybody, and looking forward to this.
So Scott, our newcomer from Singapore.
Yeah, Singapore, so small team, but kind of a big target with, investment management. So investing, generally a sort of dysfunctional, misaligned, inefficient business generally. Joe is laughing because it's the same in venture capital as well, I think, largely. And technology can sort of help. So we're essentially building a kind of heavily technology-driven platform that will allow investors to link more directly to those sources of returns and bypass that giant marketing juggernaut that is otherwise known as sort of investment management.
Thank you. Abby. Oh, we always have two. Abby Littlewise. Oh, you're muted.
All right, am I unmuted now?
Yes.
All right, amazing. I am Abby Ludwise, and I am working on a home hygiene product that features a NASA ingredient. Tweaking the formulation now, and we're almost ready to start with some of our next stages of manufacturing. So very exciting.
Other Abby, you always end up being the other Abby, and I apologize, Abby Sugar.
I think it switches, no worries. We could start calling me Sugar. That's fine. I go by that a lot.
Okay.
But it's great to be here. Thank you, Bonnie. Thank you, Joe. My name is Abby Sugar, and I'm the CEO and founder of Play Out Apparel, which is an omnichannel brand building the future of inclusive fashion through a new gender equal, values-driven shopping ecosystem. So 56% of Gen Z shops outside of their assigned gender. And when I say gender equal, I mean we don't have men's or women's sections of our website, shop by style, not by gender. I'm currently raising my first angel round, and things are going well. The Gangels just invested, and Andy Dunn is one of our primary angel investors. So really exciting times. Thanks so much.
No, good on you. Oh, am I still muted? No, Adrian.
Yes, good morning, everyone. Always good to be Startup Thursday with you all. So I'm the co-founder of Reveal. We're building a platform to automate paperwork for creators. First foray is in music. Music creators, along with other ones, just hate dealing with the administrative side of creating content. So we're automating that. We recently launched our open beta, and it's going super well. Our beta users are growing about between 15 to 30% weekly. So we're really excited about that traction and gearing up to raise a pre-seed.
Oh, good for you. Congratulations. Alec.
Howdy, Bonnie. I am here in support of of your host, Joe Milam. I work for him at Angelspan, and so
wow.
yeah. So what we do is, in case nobody else knows, Joe, I'll just steal your thunder for a second. We provide the best-in-class investor relations and reporting services for startup CEOs like yourself. We help them execute with more efficiency, hopefully have easier funding rounds, and just overall elicit more support from shareholders and stakeholders.
Thank you. Kara, welcome back. How's it going?
Hi. Yes, I've been on one of those flurries where you just have to stay focused. Things are going great. Thanks for having me back, Bonnie. Hi, Joe. Good to meet you. I'm Cara Terrell, founder and CEO of Core4 Parenting, and we are an online digital tech ed platform for new parents, specifically focused at millennial parents who are looking to raise their children very intentionally. And so we blend parenting personal development with early childhood education, teaching parents how to be their children's first teacher, starting from birth and leading up through 5 years old, to set kids up with the foundational self skills they need so that they can find their way and be successful in school and life.
Trip, I'm going out of order because Trip is always the first one in the room and the last one to introduce himself because he's a T. So Trip.
Thanks, Bonnie. My name is Trip Braden. Currently, I'm working on a project to help build an accelerator model for mid-market companies in the area of innovation. We see an opportunity here coming out of the pandemic to help re-educate and reinvigorate mid-market companies that are privately held and family-led. So that's kind of currently what we're working on, focusing on innovation, diversity, and partnerships. So thank you.
Thank you. Sham. Oh, you're muted.
Yes, I thought you were going to forget about me. Yes, Edward Box is a software platform in the procurement technology market, addressing the hole in that market where small and medium-sized businesses and divisions within larger organizations lack access to affordable technology solutions related to strategic sourcing.
Thank you. Heike, I hope I'm pronouncing your name properly.
Yes, ma'am. Hello. I'm Heike Jost, co-founder and COO of Voigtman Inc. We prevent global blindness with an automated and autonomously diagnosing diabetic retinopathy device for diabetic patients. We are currently raising a bridge or a seed, so hit me up if you like to help prevent blindness globally.
Oh, thank you. You should put your contact information. Everybody should put their contact information in the chat, actually.
Oh, yeah.
June, and thank you for joining us.
Hi, everyone. My name is June Choi. I am managing partner at Serval Ventures, and we're emerging tech and infrastructure venture builder and investor, heavy data AI focus, and we want to get transformative solutions to market.
Thank you. I think I got everybody. I hope I didn't miss anybody, except for you, Joe, our star of the moment.
Well, if you're calling me a star, you got to get a better guest list, for Christ's sakes. Yeah, what Alex talked about, the core offering of what we do, Angelspan, but it was the first of what is think of it as about a 10-layer onion of what we're bringing to the venture asset class. And the best way and you guys, by the way, did a phenomenal job in very succinctly explaining it. You've got a new addition if you want them to go, Bonnie, or they can go after me. It's entirely up to you.
Oh, Lior, you want to quickly introduce yourself and what you're working on?
Oh, hi, everyone. Me? Bonnie?
Yes, you.
Okay. Yeah, so I'm Leo Messenger. I'm from Cognility, and we are building a platform to allow e-shops to sell product guidance apps together with the products.
Oh, and Tommy, I know you just stepped into the room. Did you want to quickly introduce yourself? And you are muted currently. Oh, maybe she's still getting online. We'll come back to Tommy. No, I know Tommy Welsh is one of my best.
Okay.
Joe.
Okay. Well, as I was saying, or as Alec did a nice job at introducing the core offering of Angelspan, But to give context to what the broader solution we're bringing to market, and by the way, this has been 21 years coming. I launched a predecessor firm 21 years ago, hired a CEO to run it, raised a bunch of money, got to revenue, but what we were offering was way too sophisticated, way too early for this nascent modern era of angel and venture investing. And 9/11 just put a stake in the heart of it. So I had to shut it down and then moved to Austin 8 years ago and was encouraged to restart that old company. So this has been a long time coming. It's very well researched, and I can bore you with all that to the degree anybody wants to go down that path. But my background is I ran a multifamily office for 20 years. I joined a firm in 1990, right there at 3000 Sand Hill. And my boss was the guy in the Bay Area if you had money, private client money. He was old Bay Area money, Ivy League undergrad, Stanford MBA, entered the investment world in the mid-60s, started his own firm in 70, and was class. Grew up right there in Woodside. In fact, if any of you have tracked Larry Ellison's big Japanese Shangri-La on 25 acres in Woodside, he bought that property from my predecessor's estate back in 93. When my predecessor died in 92, he had sold his firm to the bank in Liechtenstein in 88. I joined in 90. He died of cancer in 92, and I bought it back from the bank in 93 and ran it for 20 years. And because of who he was, we had a blue chip list of clients. The first portfolio I was handed to manage when I joined his firm in 1990 was Larry Sonsini's personal money of Wilson Sonsini. And we had a couple of Sequoia Capital partners as clients and all this because of who he was and how respected he was. And so I got lucky. I said I'm sort of the Forrest Gump of the venture world because I just happened to be in the right place, the right time on a lot of what turned out to be really important inflection points in the venture journey, certainly from 1990 forward. Including, for some of you that may know, the Band of Angels, which is the sort of granddaddy of the modern era of angel groups. That was founded in my office by my subtenant, who was dating one of our clients. And so this stuff you can't plan or make up or even understand the significance at the time. But again, with the benefit of hindsight, they were very, very important experience to be exposed to. But I was probably the right guy in the right place, right time. And I was probably the right guy to occupy that seat because I'm very compulsive about research, as Scott probably has recognized. He and I have what we were laughing about earlier is a promance, professional romance. We've never spoken, but we've followed each other on LinkedIn now for a couple of years, I think. And I post a lot of the research, which I'm going to offer as much as anybody would like. I've got a lot of it synthesized and consolidated, and I'm happy to offer anything in chat. But what we've built is what I call the middleware, if you will, solution. I hate to use buzzwords, but it's really middleware serving both sides of the venture and entrepreneurial market. All right. If you look at how we fund entrepreneurship today, which is really critical to get right for all the reasons we've all read, all the headlines, it is critical, and we're at a critical juncture. We largely fund entrepreneurship the way people used to invest in publicly traded companies 100+ years ago. Because before the third SEC was formed in the Third Securities Act of 1933, publicly traded companies didn't have standardized reporting requirements. They didn't have to adhere to the things that they have to adhere to today. In fact, the 33 Act was, if you look at it, it was the language of the act literally says, in an act of risk management to mitigate further actions and shenanigans that took place in the late 20s when the bubble exploded and all the insider trading and short selling, all the manipulation went on that destroyed massive wealth and contributed to the Great Depression. In an act of risk management, they established the standardized reporting requirements. If you're a publicly traded company, you've got to do this as an act of risk management for the investors. And if you look at, and then in 1940, the Investment Company Act of 1940, in a further act of risk management, they formalized the standardized practices to manage portfolios on behalf of other people. So think mutual funds, ETFs, those are all called 40 Act products. And they all have to adhere to the laws, the governing laws of the 40 Act, so that risk is managed further for those investors, shareholders, through proper diversification, proper reporting and disclosure at the investment company level, whoever is managing those mutual funds or ETFs. So what we've created at Angelspan and our Legacy Funds division, and Legacy Funds has a separate website you can check out, but it's a wholly owned subsidiary, is we created the first 33 Act-like reporting for startups. so startups can actually communicate the way they should and need to. Not because they have to, because they're Reg D private offerings, but because it's both an act of risk management for potential investors and existing investors. Think Theranos or now Aussie Media, right? Bad corporate governance, bad transparency leads to bad outcomes. All right, the shadows is where fraud takes place. We get rid of the shadows of entrepreneurial investing through proper professional reporting. Startups hire us and pay us to produce monthly updates, quarterly reports. We also have IP that defines the structure and what needs to be reported. It's called the Bell-Mason diagnostic. And in fact, Alec, if you would just post our materials on this stuff in chat as I'm going along and referencing.
Sure.
And I can go on for hours about the Bell-Mason. I encourage you to look it up. And again, I offered my email. If anybody wants to do deep dive on anything I'm speaking about, I love it. I can talk about this stuff forever. Because finally, after 21 years, the marketplace is finally recognizing the need to fix how we fund entrepreneurial capitalism because of the bias, because of the concentration that takes place in 4 cities where 80% of the activity takes place. Yet there are smart entrepreneurs all over the country. God bless Steve Case for drawing attention to that in a very public way. So what we built is the middleware to solve the shortcomings on the entrepreneurial side. Entrepreneurs need to, if you're legit, you should be reporting properly. And properly is not do it yourself, folks. I've got all the research that proves that. Not our research, research that's out there. Everything I do is research-based. I was a money manager and securities analyst. I am compulsive about research. So when I make claims, it's always backed up by research. I'll tell you what's the result of experience, observation, opinion, but unless I disclose that, everything I tell you is backed up by research. So we fixed what's the shortcomings on the entrepreneurial side. What has happened with that service, and we've got reams of testimonials, Alec, grab our testimonials, that not only does the investors love and acknowledge this is the best they've ever seen coming from the startups they have either invested in or are looking to invest in, and it catalyzes investments oftentimes after 1 or 2 updates that we produce for them, because it finally gives confidence to the investor side of the equation. But also we've got unbelievable testimonials that our service, largely because of both the personal and professional components, we do most of the curating. We do most of the heavy lifting on the production side. But because of this Bell-Mason diagnostic and the rigor of the Bell-Mason diagnostic, it also helps those entrepreneurs execute better. And one of the great testimonials we have is one of our clients, husband and wife launched a series here in Austin, a series of retail outlets of smoothie stores, if you will, and it's called Blenders and Bowls. And what their little unique spin on the blender or the smoothie model was is instead of in a cup trying to suck that stuff through a big ass plastic straw, they put it in a bowl. But that allows them also to add various and sundry other things that makes it easier to consume. You're not sucking it through a straw, but they can put whole fruit and they've got their own recipes. And they had 4 stores over 10 years, I think, or 8 or 10 years, and Alex can correct me on anything. That's also why he's here, folks, to hold me accountable to accuracy. But they decided to productize it. It was doing so well at the store. I think they had like $10 million in revenue in their 4 stores. They're crushing it, but they productized it. And so they became a product company, not a retail outlet. And that they went through an accelerator here in Austin that's sort of the top CPG accelerator in the country. And found out about us from some of their other clients that use us and use. Anyway, her testimonial, the gal who runs, the wife is actually the one who runs it. She said, "This made me a better CEO." Now, they were already doing 10 million in revenue. She's pretty damn good already. And that's the point, is that accountability and transparency actually facilitates better execution. And there is, again, research to confirm that. And there is a research that shows there's a link between proper voluntary transparency and eventual entrepreneurial success. And the reason that takes place is both a corollary relationship. The serial entrepreneurs that hear about us, they sign up with 1 phone call and then they say, oh, by the way, what's it cost? They know how important this is to get right and how tough it is to get right, but how impactful it can be on the business. One of our clients just got a $12 million funding, or just closed on a $12 million funding round, just announced yesterday. But it also, so that's a corollary. Serial entrepreneur, been there, done it, knows how important this is, they get it. That corollary between transparency and success, but there's causality. It actually helps the first timers execute better. And that research is out there. So that's the entrepreneur side of the 2 sides of value we're delivering to the marketplace to improve and bring more efficiency and what I call efficacy, efficiency and effectiveness to this entrepreneurial funding cycle. For the investor side, we've built in the public markets, it's called a turnkey asset management platform, or TAMP. And what that is in the public markets, back in the early 90s, there was a big movement after Charles Schwab set up a division to service the investment advisor, what I used to be, fee-based money manager. They set up a whole division to act as a custody of the client's assets, and then some ancillary services to support that new fee-based ex-Merrill Lynch broker that now wants to be a fee-based financial planner, or, align their interests with the clients versus being a salesperson. And that facilitated a lot of Merrill Lynch and Dean Witter brokers leaving the wirehouses and setting up their own shops. But what became clear is they had relationships with the clients. They could bring the assets, but they actually didn't know how to manage money. They were just largely trained to be asset gatherers and relationship managers and sell the Merrill Lynch product du jour. And so there's an industry that sprung forth and there's a firm out of St. Louis called Buckingham that was one of the earliest that formed what's called a turnkey asset management platform. They set up the back office, the filings with the SEC, the ADV forms you have to file, the reporting through the various software. Advent was the leader at the time for just reporting on your client's portfolio activity, performance quarterly, et cetera, et cetera. And these Merrill Lynch brokers didn't even understand what all those requirements were, but they wanted to go be entrepreneurial and be aligned with their clients' interests, but they didn't know what they were doing. So firms like Buckingham form turnkey asset management platforms and get 15, 20 basis points of the annual management fee to do basically the whole back office and help them actually manage the money better for these clients they've brought over from Merrill Lynch. That's what we built for the venture asset class, a venture turnkey asset management platform. So we partner with and work closely with the fund administrators, the people that do the K1 production for the venture funds. And then our platform is the analytics so that those VCs, family offices, angel groups that actually want to do it well can actually manage a 40 Act like approach, proper diversification to manage risk properly in the asset class, proper staged capital deployments, follow-on funding rounds, supported by data and analytics so they can manage systematic risk better, the timing risk, which is the #1 determining factor, by the way, of entrepreneurial success. It's over 40% determinant of success or failure is simply timing. That old question about why did MySpace not work and Facebook did? It wasn't Mark Zuckerberg's genius. It was because the iPhone came out in between, and that's pure timing. And so these are the things that if you're a prudent money manager, an institutionally rigorous money manager, like I consider myself, and I was, and I could give you bore you with all the bona fides of the prior career. So I'll stop talking in a minute and let everybody poke and prod. But we were very good at what we did because I managed all risk properly. And so we simply built this middleware to serve and address the shortcomings of both on the entrepreneurial side through proper reporting and performance analytics. The Bell Mason diagnostic allows us to objectively track how our clients are executing. And I can explain that in further detail, or we can do it offline. And those analytics populate the TAMP. And we put all the other stuff, back office, fund administration, K1, all the sort of back office things, and a management dashboard so that our licensees, which we license for free, by the way, to people that actually do want to invest better, so that they can execute a better venture strategy around whatever thesis they want. Female entrepreneurs, Midwest underinvested communities. You pick the thesis, we can help you manage it and optimize the likelihood you're going to create real alpha, risk-adjusted returns for those investors that want to support that cause or thesis that you are designing your venture strategy around. That's what we built. I've been published 4 times in Institutional Investors Journal of Private Equity. We've been recognized both in Best in Class in Investor Relations, the first Wall Street quality analysis on startups, and the professor of finance at Cambridge University, when he read the first 2 of my white papers published in II, he said, I want to talk to this guy. And so we spoke back in 2018 when these were coming out. And he said, you're going to redefine the venture model. I said, that is exactly our intention because it needs it. And then thankfully this year, late last year, there's a group out of Singapore, Scott, that funded Clayton Christensen, the father of the phrase disruptive innovation. He was a professor. He's dead now. He died about, I don't know, a couple of years ago, the last couple of years. But he taught entrepreneurship at Harvard's Business School, and he also had a sideline consulting practice. And the Singapore group hired InnoSight, the consulting firm, to study the venture industry. It's a great report called The Future of Venture Capital. And if you look at where they said the future is going, it's exactly mapped perfectly to the toolkit I've been working on for 20 years. And so after 20 years, we're going to be overnight successes because now we've got InnoSight. And then PitchBook put out their Venture Outlook, 2021 Venture Outlook in January, and talked about the innovations coming to the venture model and why it's needed. And then Ernst & Young put out their report in January on the private equity asset class broadly defined and said, this is where the innovation needs to take place. And so all the things that the rest of the world has finally come to the conclusion and observation that I saw 25 years ago when I got active in, I was one of the first members of the Band of Angels. I was in other angel groups early on there in Silicon Valley. And I saw the flaws in how we fund entrepreneurial capitalism when I simply contrasted it to the rigors of the data and the research and the risk management practices that I was trained and deployed managing other people's money at the time. So I had a wonderful front row seat to have inside exposure to the venture and angel process while having managed money for families like DuPont's and Larry Sonsini's and old money and new with a great deal of success over a protracted period of time. So that's the context. I'll open it up. I'll shut up and then Bonnie, you take it from there, and why don't you quarterback it from there?
We have a few latecomers. I know June has to leave soon. June, do you have any questions? Anything you'd like to ask since you're still? Okay. Thank you. I'd like the latecomers to introduce themselves. So we have Tommy Jenkins, Eric, and Mahul. Do you guys want to, in that order? Mahul, I know you're not shy. Go ahead.
Yeah, Ajay, how you doing? I have an augmented reality diamond price comparison company, so I completely understand where you're coming from and what you're talking about because I've seen it firsthand, obviously. And I'd love to chat with you offline if possible, later on today, tomorrow, whatever.
Anybody wants to talk to me, my email, and I'm available at any time. So
great, thank you.
Oh, you put it in the chat already, right?
Yeah, I did. Yeah, Joe at Angelspan.com. Pretty straightforward. Just Joe. That's easy. Like I say, I'm just Joe.
Eric, do you want to introduce yourself?
Oh, yes. Hi, Eric Bratt with angel investor based out of Milwaukee, Wisconsin. So, yeah, I've been learning about angel investing for a while and now starting to put some capital behind it. So, soaking up as much information as I can.
Curious, what are you investing in, Eric? What are you?
Yeah, I've been kind of more active on the crowd funding side. So looking at some software as a service platforms as well as the robotics. So I've become a fan of what Wavemaker Labs has been doing with Graze, which is a electric robotic mower, as well as Blended, which is a robotic smoothie company. And then also getting into more interest in fintech. So looking at some new takes on savings and investing and trying to tap into the market there.
Oh, thank you. Tommy, do you want to introduce yourself? I don't know if you have good connectivity or not, but otherwise, anybody, questions? We always open up to Q&A now.
I'll jump in.
Abby, go ahead.
Here. Thanks. You sort of tapped into it at the very end of your introduction, Joe, but I was going to ask how, when you're talking about diversification and risk management with the Bell Mason diagnostic model, how you're looking at diversification and risk management in terms of diversification of founders. And you touched on it a little bit at the end, but I was wondering if you could go into a little bit more detail with that, especially when we're talking about access to capital and the gap in funding.
Yeah, this is something that is near and dear to my heart for a myriad of reasons. I won't give you I won't bore you with details of the bona fides, but what was revealed to me back 27 years ago when I was starting to get active, because I was also a philanthropy consultant. I gave clients money away for our old money clients. They'd say, I care about these causes, find me the best charities. Well, that's securities analysis. I'd look up their balance sheets, their endowment, how well it was managed, who's on the board. I mean, it's basically securities analysis. Anyway, when I got active in angel investing, it was those clients that were the first ones to lean in and say, hey, if you see something I might like, let me know about it. And you would think they were the most risk averse, but in fact, I knew, because I've actually studied the psychology of wealth since college. So this is one of the most interesting things for me, is understanding why people write checks. Nonprofit, for-profit, venture, stock market, doesn't matter to me. Why? And I've got a whole piece on that. I've done an educational webinar called The Psychology of Wealth. I'm happy to share as well.
I would love to read that. That sounds amazing.
I would too.
Yeah. I've got volumes of stuff I've been accumulating and stuck in my head that I just give it all away. I just give it all away, folks. So please ask me for anything and everything. We give it away. But they leaned in and they said, see something I might like. And that was really the precursor to what they now call impact investing. And I always prided myself on never putting any of my clients in a style box or an investment objective risk tolerance, because that's all nonsense. Investors' temperaments change almost daily. And I knew that intuitively. And so I always held myself accountable to get inside my client's head and understand what's important to them right then, so that I could then serve them better. And regardless of what it was, whether it was the sort of left brain financial stuff or the right brain qualitative stuff. And again, that served me well in managing their money, being their philanthropy consultant, and then what we would call now impact investing. And if you study the history of the United States, which I have, America was founded by angels. Hamilton went to a group of wealthy people in Lower Manhattan to get funding. Washington tasked him to go get money to buy more bullets and guns in the middle of the Revolutionary War. And that organization he went to and got funding ultimately became the New York Stock Exchange, by the way. And Washington was inaugurated on the steps of their clubhouse. It's now called the Federal Building in Lower Manhattan. It's across from the New York Stock Exchange. So if you look at the history of this country, it is absolutely aligned with this phenomenon of entrepreneurial risk-taking. The other thing that's true, we were founded by entrepreneurs, immigrants leaving their home country, right? It's truly one of the key components of American exceptionalism that sadly we're losing some of it, but I won't go there. But what was also true about the United States, and I learned in my study of philanthropy, is in the history of recorded mankind, going back to the Persian Empire and the Roman Empire and the Greeks, the major civilizations, the leading civilizations of their era, even China going back further, there is no civilization, culture, leading empire in history that is as benevolently supportive of others, philanthropy, as America. It's one of the components of and determining factors and contributing factors of American exceptionalism. And I've known this a long time. And when I saw my old money clients and my philanthropy folks stepping in, it was so inspiring for me because I knew where their heart was. And it was the DuPont money is the oldest money in the United States. And I can go off and give you an hour on the DuPont history. My client's grandfather was Ernie DuPont, the president. So I have the whole archives of the family DuPont money. So I could go on hours on this. So to answer your question very succinctly, and I'll let you talk, Abby, is that I'm getting chills talking about this. It still inspires me. What we've built is to mobilize the best of America. Entrepreneurship, regardless of your profile, it shouldn't matter. And the fact that it does is an insult to our founding fathers and the formation of what defined American exceptionalism. But also I want to mobilize and treat well, meaning both qualitative and quantitatively, that impact money that's dying to invest better in worthy ventures, but the current system just doesn't allow it because of I call it the boy band venture model. Yeah, the system at large. The system needs fixing because it's keeping the best of American investment out of the system, promoting the Theranos' of behavior of the world, or now Aussie medias of the world. That's an insult to me. I saw it 25 years ago as an insider out on Sand Hill Road.
Yep.
So that is what we've built. That is the core inspiration. If the origin story, if you will, was that DuPont client stepping in early and exposing to me just how deep impact money is 20 some years ago.
So two things. One is I would love to continue this conversation. I don't want to hijack this whole call for everyone, but you know, obviously as a female founder, as a LGBT founder, this is very close to my heart and to what I'm building. And there's so many points. And I also read probably half of my day. I just consume reading. And so you do as well. So your, you know, connections to history and everything, but also to play devil's advocate a little bit, because I would love to get into this. My friend Rob is the professor of the director of the Center for Ethics and Society and the Center on Philanthropy and Civil Society at Stanford. He's a philosophy professor, and he wrote a book called Just Giving: Why Philanthropy is Failing Democracy. And how did you read it?
Oh, I know. Trust me. He and I could like spend 3 hours. I'm compulsive about research. I've read everybody.
Okay, because I was like, you have to read this book if we're talking about like philanthropy and the US being founded and blah, blah, blah. Anyways, someday come from Austin, come to the Bay Area. He's my next door neighbor in Redwood City. So anyways, I'll send you an email.
the one thing I want to also put forth, because it's linked to what you just said. I get every year I Have a Dream, Martin Luther King. He was right. It's the content of your character, not the color of your skin, right? When you translate that to entrepreneurial activity, it shouldn't have anything to do with what you look like. It should be all about the what, the why, and the how. Now, the Bell Mason diagnostic allows us to measure how well you're pursuing this impact dream. Mm-hmm. So just because you are a Black LGBT female doesn't make you a worthy entrepreneur.
100%, yeah.
And that's the only point I also make. It has to do with you have to execute well. And if you're executing well, I'm going to die on that hill finding you the right investors to support you the right way for the right reasons. But if you're not, don't weaponize your purported victimhood and intersectionality, because I got no time for that shit either. And that's what killed philanthropy, is that behavior. And I saw it 25 years ago when I started studying it. Mm-hmm. There's a shitload of money wasted in philanthropy. Mm-hmm. Oh my God, it's unbelievable. And that's a crime also. Just like money's wasted in the venture asset class, that's a crime also. Just because you call yourself a nonprofit doesn't validate your worthy bona fides. I'm all about execution. So.
I'm going to email you. I want to have a longer conversation.
Please. You can tell I love this stuff.
I'll let someone else ask a question. Bonnie, I'm throwing it to you.
Okay.
Bonnie, can I ask a question?
Oh, sure. Absolutely, Kara.
Joe, your enthusiasm and your passion is contagious. And something that you said that struck me is when I introduced our company, everything I just said about it is real, right? Mm-hmm. But outcomes are not really our short-term focus. We work with parents.
Stop. What do you mean by that? Let's parse that real quick before you move off of that.
Sure. So the outcome that we are looking to create a generational shift on is kindergarten readiness. It is at least a 5-year wait period, if not more, before we know that the outcome has occurred for us, right? Because we have to work with these parents from birth until 5, and then they enter the school system.
I got it.
Got it. Okay.
So your question is?
So it's not so much a question as it's just a feedback, comment, and a thank you, because our premise is who before what. Who are you, and how do you typically relate to other people? Yeah. Who is your child? What is the nature they're born with, and how are they typically going to relate with their leading traits to other people? And then how are you as the parent and the child going to create that forged connection where you become a team of problem solvers, a proactive approach to growing and learning together every day? And I do this exercise with parents when they come to work with me.
Kara, let me. I'm going to stop you there because I got it. My brain works quick, because this is an area that's been important to me because I have 3 kids, and I got your story instantly. 0 to 5 is the most critical years. And let's talk offline because I can solve this for you. And instantly the pattern is very much aligned with the DNA and the research that supports our TAMP model.
Mm-hmm.
The best way to invest in startups is don't try and pick winners. Don't define what you think is the outcome. You eliminate bad. Don't support bad behavior at the entrepreneurial level. And we obviously don't advocate bad behavior at the investor level. We give them the tools to execute good behavior by helping them filter out bad behavior and spot it at the entrepreneurial level. So you don't let bad entrepreneurs into your orbit, impact or not.
Gotcha.
That model, that psychology and decision-making model is the same as yours, because outcomes in entrepreneurship are indeterminate. You don't know who specifically is going to win, but you can avoid the bad behavior. And that's sort of what your model is, it sounds like doing, is because you don't know. There's also a lot of research on how much literally genetics impact outcome. I don't know if you know that professor, that gal she was written up in the Times. It's a huge, you guys could talk about that for hours. It's fascinating. But the point is, we're talking about optimization. By eliminating bad, by being able to spot and encourage and nurture what is effectively good behavior by principally, because you can spot bad behavior in entrepreneurs and in children's patterns or parental patterns. So eliminate the bad patterns, you're going to optimize the chances for good.
Right. So my question is, as a first-time founder, as a first-time CEO and a first-time entrepreneur who learns very quickly and is able to adapt, I still have an unknown about what's good money, what's bad money, right?
I'm one of the experts in the world in the psychology. Well, I can help you. Okay. Just leave it at that. I can help you. I know your struggle. I've watched it. And I've seen the entrepreneurs make bad choices that blows up their business because they didn't know they were taking money the wrong way, either from the wrong people or too much from one, whatever. I've studied this stuff. That is why I built what we built, to fix all those granular things and optimize on worthy entrepreneurs solving real problems in a thoughtful way. Outcomes don't matter to the right investors. It's the journey they want to support. And that's what we built our platform to be able, and also de-risk it for them to feel good about supporting worthy causes, regardless of the economic outcome.
Wow. All right. So my last and final follow-up question is, when I present, we talk about looking to work with social impact investors and people, planet, profit mindset thinkers. Is that just another fancy way of saying philanthropy, or am I really targeting the right people?
Well, this is a great point. And again, we could spend hours on this, but this is a message for everybody. In knowing what motivates people to write checks, I've studied this, whether I could go on for hours. When we work with a startup, I can quickly understand your model. It's just, I was a securities analyst for 30 years. I mean, this is just what I was trained to do, is research, for crying out loud. I was paid to do it. If you are an impact, which you are, and Abby, you too, and anybody else that might be on here, then it's incumbent upon you to lean away from that story. You have to overemphasize legitimacy, because the impact story jumps off the page. And conversely, anybody that's got a high-tech, fancy AI, ML, we're the smartest people in the room and our idea is better than everybody else that was really smart, you've got to lean into finding a reason why somebody's even going to give a shit. Who's going to care? Because you always have to have that yin and yang balance. And a mistake that impact deals, impact ideas, and impact entrepreneurs, all they're selling, and this is just bad training, not bad intentionality, is their passion for solving this really important problem. It's not about your passion. It's about your investor's passion. And there's something that won the Nobel Prize in 2002 in economics called prospect theory. Danny Kahneman and Amos Tversky are brilliant. If those are two people you gotta research. But they're psychologists, but they won the Nobel, and Amos had already died. So they don't offer the prize posthumously. So Danny accepted it and did reference and talk obviously about Amos. But they're psychologists, yet they won the Nobel Prize in economics in 2002 for their work that's called prospect theory. And what it basically says is people's behavior are motivated more strongly by the fear of loss than the benefits of gain. The prospect of loss has an outsized impact. Now, as it relates to both philanthropy and impact investing, the loss that you have to manage on the part of those impact investors is the loss of the emotional return if you don't execute well. It ain't the loss of money. It's the loss of the emotional satisfaction they're hoping to experience if your efforts with some of their money and their other advocacy, finding you other money, will deliver on it. Because I've watched it firsthand. The disappointment, the loss of the emotional journey is what they fear most, not the money. That's the disappointment over philanthropy, because they write a check to a nonprofit and the nonprofit just screws it up. And so they quit supporting that nonprofit. They're already losing the money when they write the check, but that's not why they wrote the check. It's because they wanted to feel the return on investment for them was the emotional satisfaction of seeing that money deployed well, so that that cause actually got addressed effectively. So that's literally when you're talking about your messaging, and this is what we coach our clients on, and this is how we help worthy entrepreneurs get it right. Because you have to understand these things, what's motivating the reason, and it always has to go back to prospect theory. Now, if it's a pure financial buyer on a pure tech stock idea, then that's what our venture model, our TAMP, actually addresses. How to manage all financial risks properly in your venture strategy around a more financially motivated venture thesis. It's okay to have a pure financial motivation, but you deal with better investment right. Don't fool yourself and call it investing when it's gambling. Because it's just play money if you're not investing properly and calling yourself a business angel. That's horseshit. Seen it for 25 years from the inside, starting at the Ben of Angels. They're fooling themselves, calling it investing when it's play money and gambling. So there's a way to get this right. And that's the frustration of impact deals. And unfortunately, most of the people that are drawing awareness to impact investing and the worthiness of solving XYZ SDG cause or diversity cause, largely they all came out of the nonprofit world. They worked at foundations. They only know how to sell awareness versus how to solve problems. They weren't trained to solve the very problem at the nonprofit. They were trained to raise money by selling emotions. And that's the problem. Okay. So that's what, well, like I said, these are causes that have been important to me for a long time. And we've literally used robust research, design thinking with a great deal of expertise of others and my own. I don't like to toot my own horn. I'm just more persistent and compulsive about research than most people. That's all. I don't take myself serious, but I take what I do really, really seriously, because these are really serious issues that need addressing.
Oh, Abby has another question.
Well, I'm just going to tie in so much of what you've said into geography a little bit, because you made the move from Silicon Valley. You sort of grew up and established a lot of your initial education for yourself and for doing what you're doing in Silicon Valley. And how are you seeing like fixes to the system or changes having moved to Austin? Yeah.
Austin is, when I got here 8 years ago, it felt like high school to me. It's the boy band. It's the cool kids club. I saw that in Silicon Valley 25 and 30 years ago. So patterns repeat themselves.
Interesting. Yeah.
And the same behavior, and you go to a demo day or an entrepreneurial whatever, it's high school.
Mm-hmm.
And everybody's looking around the room, right? Who's there? It has nothing to do with critical thinking, which is system 2 thinking. Look at Danny Kahneman's book, Thinking Fast and Slow. It explains everything.
Yep.
And the second book, which I've got that came out, it's called Noise. It's the follow-up to that. The venture and angel world is full of noise by Danny Kahneman's definition. And we're putting signal in the system. That's what we solve for. Not noise, signal.
Yeah, yeah. And in terms of how the system is moving and changing, let's think about generations then. What do you think about sort of all the news profiles, et cetera, of Gen Z VCs and angels? Why are you laughing? Tell me.
Yeah, I want to know what happened too.
They're promoting high school students. They're giving them money to invest money.
I don't know if I appreciate that. I'm not a Gen Z, or if I'm a little bit offended by your lack of trust in the next generation. Lack of belief, maybe. You just think they don't have enough education, or.
When you're investing somebody else's money, Look what they did with their own money. It's called Robinhood and GameStop.
Yep.
And NFTs and whatever, right? They think they know what they're doing, and look at the behavior. I've seen this. I'm old enough to not be cynical about the young generation. I've got 3 kids and they're brilliant. And I have great hope because of my kids and that next generation. But I also see bad behavior. And I see that same behavior from a lot of people that are in their 50s. They never grew up.
Never grow up. Yeah.
So it's not, but the amount of time that is being promoted for the optics, it's all limbic brain manipulation. It's the optics of, aren't we cool because we've got the next, and we're giving Stanford students money. They're really at the tip of the sword of entrepreneurship. I just want to throw up.
You're killing me.
Throw up.
There's a reason why I invited Joe.
Thank you, Bonnie, for this morning. Thank you, Joe.
Joe and I have had several conversations.
Don't worry, Joe. I got the next generation covered. They'll be fine in about 18 years.
Well, trust me, don't get me started on that. Another name I would encourage you all to look up and read is the best thing I've seen him is when Daniel Schmachtenberger talks to either Brett Weinstein or Eric Weinstein. Watch the podcast when Daniel is talking to either of them. It's some of the smartest people on the planet. And these people are brilliant. And so the thing that I've learned about myself, so people say, you're awfully smart. I said, no, I'm actually not that smart. I'm a process-oriented guy because I came from a middle-class family. And as I said, my dad was born into middle class and he aspired to be white trash and he was successful. He died a street person, alcoholic on the streets of Tacoma. Thankfully, my mom remarried a first-generation American immigrant, a Portuguese, and they did extraordinarily well and created the American dream with him being a first-generation American. It was fabulous. But I'm a nobody. If you look at the conventional bona fides, that boy band Stanford grad came from money and went to the right prep schools. I am the exact, but that was my boss. Denny King was that guy, except he was class. When he died, the Stanford Chapel was capacity and overflowing. And people said, he was comfortable being around CEOs and kings and janitors, and he made them equally comfortable. I had like I said, it changed my life because of being able to join and be mentored by that guy, because he was of means. He came from means, went to the prep schools. He went to prep school with that DuPont. That's how they became a client down at Thatcher in Ohio. But he wasn't the ugly 1%ers. He was the best of what America represented because it was his actions, not the optics. And he saw that in me. My optics sucked. And yet he literally so quickly brought me into I was the only person, I was his assistant portfolio manager, but everybody else had Stanford MBAs. And I'm a Chico State grad, for Christ's sakes, folks, if any of you are from California. #1 party school in the country in the late 70s. I'm a nobody. But he saw what I had. And that's the point. And we have to get to that. And anybody that leads with optics, I instantly discredit because it's, Daniel Schmachtenberger calls it's been the weaponization of limbic manipulation. Media, social media, literally with AI, it's become weaponized to manipulate the limbic brain so that people make decisions based on some emotional reaction. That's the problem at a scientific level. And so I have a really quick hair trigger for people that lead with optics because I instantly discredit them. My hypothesis is, because I think like the scientific method. Wasn't trained as a scientist, but it's one of the gifts I do have, is that I follow smart people and then whatever they think about that subject I'm interested in, that's my new belief system. And then I collect data to disprove their observations because I also know they're not 100% right. But they're a hell of a lot more right than I'm ever going to be. And I don't like to learn life's lessons the hard way. I like to add information, not have to learn information. Okay. And so that construct of seeking the smartest people on the subject I'm interested in, adopting their belief system, and then going through my career, seeking data to disprove that hypothesis or belief system is how I work. And it's been a gift because I don't get caught up in groupthink, echo chambers, right? The Republicans are not 100% right and they're not 100% wrong. And guess what? Progressives are not 100% right and they're not 100% wrong. It's my task to find out what's right and wrong in both if you're pursuing a political or policy belief system. Don't pick a team and then just be part of the echo chamber. Well, Silicon Valley Sand Hill Road is an echo chamber. And now they're adding more crap to that echo chamber called millennial VCs and giving them money and saying, oh, aren't we diverse? Anyway, sorry, I'm on my rant.
We see the same thing in a lot of investment management, Choi.
Of course. Oh, Scott, you and I have seen this for years.
Yeah.
I saw in the public markets, whether it's hedge funds, whatever the hell it was, I've seen this rodeo before. I was the youngest guy in the room when I took over the firm in 1993. I was 31 years of age. I was one of those young kids. But I had the benefit of the advocacy and support of Denny King. I also had, I'd spent 5 years with Leah Hutton right out of college. I had game. He saw it, his validation, and I also had good client skills. Our biggest clients, Denny handed me right away. And so I was able to, in a fairly short period of time, get bona fides with our clients in their eyes because of both Denny's advocacy and how I performed. So I was able to take it over because it was based on performance, not based on what somebody else, how I looked. It was the opposite. Can you imagine being a short, bald, white guy with a Chico State degree in the financial world? Oh my God.
There are a few.
And I started losing my hair in high school. I mean, I think there should be a ribbon or a bracelet for short, bald white guys that went to Chico State because nobody gives a shit about us in the financial world.
Yep. I mean, that's sort of where you need to go to a data-driven approach, right? Where you look at the statistics and the outcomes rather than the sort of pedigrees and the inputs. So we're kind of completely aligned.
This is science, folks. Think if you really want to understand how to optimize processes, because I'm a process optimization guy. It is an instinct, and I've just read everybody out there. Danny Kahneman's work's brilliant. But if read the book Moneyball, because the whole Moneyball philosophy was Michael Lewis meeting Danny Kahneman. It turns out they're neighbors. And when he was collecting data in Berkeley, and when he was collecting data to write Moneyball, he found out that the scientist behind the very nature of sabermetrics, which is the math and the data of Moneyball for baseball, he said, well, God, he lives like up the hill from me in Berkeley. So we got to know Danny Kahneman. And as Danny was just talking about Amos Tversky, he said, Jesus Christ, that's another story. And so he ended up writing that story a number of years later. It's called The Undoing Project. Read that. It's phenomenal. I love Michael Lewis. He's an unbelievable writer on unbelievable topics.
By the way, we have requests for your top 10 book recommendations. I didn't mean to interrupt.
Oh God, well, oftentimes it's the ones right in front of me. But I think this is an important one. I haven't finished it yet.
I didn't mean to interrupt. I'm sorry.
No. Where is it? Oh, here it is. This to me. Oh, come on. It's called The Death of Expertise. Everybody's a thought leader. Everybody's an expert. And so the weaponization of the limbic brain through social media has allowed anybody to make a claim of expertise. And what we've created is a pool of people that they themselves don't have the ability to spot bullshit and to not recognize that person as an expertise, regardless of how much they were promoted, how many panels they've been on, and how many blogs they've putting out largely noise. So back to your question. Moneyball's great. Again, I'm a Michael Lewis fan, right? Now, one of the most impactful books in history, and it's playing itself again. And you have to understand, I voted both sides of the aisle. I do not fall into any, I voted for Ronald Reagan in 80, Mondale in 84, 88, Dukakis, 92 Perot, 96 Perot. I have the weirdest, I do not have a political affiliation. I'm a card-carrying patriot, and I simply make an assessment of what I think is best. I'm not always right, either who wins or who would have been best. But I always think about it for what's best for America. So when I say, that's why I have to give you the caveat. I think everybody should read Atlas Shrugged. Period.
Absolutely.
You start there.
Yep.
Now it's a hard slog. Trust me. It's a hard slog, but it's important. Ayn Rand was a genius in how she identified the human condition and the dynamics, and it's played itself out time and we're seeing it again.
Yep. Who's John Galt?
Who is John Galt? My prior startup that to solve this problem we're now doing, we created an analytical data point of tracking longitudinal performance. It was called the GALT score, by the way. No kidding. I trademarked it's GALT score. Anyway, so I think you start there. I'm fond of Michael Lewis because he does a great job at taking important topics and giving you and lacing a great story around it. So from a style standpoint, I can consume I've read everything he writes. I think that's really important. Danny Kahneman is miserable to read. I like to watch him. I love Gladwell. Blink is really important, folks. It's, again, process optimization. And Danny Kahneman was the keynote speaker at the CFA Institute's annual meeting in, I believe it was Hong Kong in 2018. And he did a discussion, again, the reason that so much of process optimization has been applied to the financial world is A, there's a big financial incentive to get it right, but B, you have an immediate feedback loop. You have data, pricing to confirm and do QC on your model. You make a decision, it's priced in the marketplace, so you can now calibrate. And you have a relative and absolute calibration against your benchmark, the market at large. Are you creating risk-adjusted returns above an index, your index or benchmark? So a lot of process optimization has always been, and what was Wall Street that actually was the first to spend money on mainframe computers, then mini computers, and then AI, et cetera, for all the same reasons. Financial incentive, but also you had a tangible feedback loop for optimization. And that's what I've been consuming my entire career is this stuff. I lost my train of thought. So Kahneman's book, though, Kahneman's work, all you need to do is read the first page of every chapter and not read the rest, because he then, as a scientist, gives you all this stuff to reinforce the very point. I don't need the science. He's so goddamn smart. I just read his observations, go to the next chapter. All right. So I also think the long form podcast, I don't think Joe Rogan's success is an accident because he gives people space to give fully formed thoughts. It's the antithesis of limbic manipulation. Schmachtenberger's the same. He's really hard to listen to. He's sort of the Danny Kahneman of his, but he's a meta thinker. I mean, this guy's one of the smartest guys I've ever, best educated guy, and he was homeschooled, by the way, until he hit, I think, college. Brilliant. And he chooses every word, but you listen to every word. And I always put him on pause and have to go look up the word oftentimes. I mean, his vocabulary is way, way, way beyond my pay grade. So, but I stop and I listen, I understand every piece along. Brilliant. So I would say consume Kahneman's work, but it's hard to consume. Read the first page or two and then don't read the rest of the chapter. You don't need to. Michael Lewis, he covers really important stuff. Malcolm Gladwell, Blink is critical. Oh, going back to what I was saying. So Kahneman was presenting at the CFA Institute. And he said, look at folks, first and foremost, algorithms beat human bias all day long, right? Why? And then of course, he's got all the issues of perception and biases that influence individual decisions off of any optimized decision, investing or whatever else. But the key point, which is brilliant, because it's perfectly aligned with the research that was captured in the book Blink, is simple algorithms beat complex ones all day long. Because the very construct of a complex algorithm has human bias in it, pride of authorship by the quant that is building it because they have their own ego, they have their own financial incentives. Simple algorithms beat complex ones. In the book Blink, he takes chapter after chapter and shows that a skilled, experienced practitioner, and he talks about medicine, psychology, all these industries. Every chapter is a different industry. Says that a skilled person with the right 4 pieces of data constrained to a short decision-making time window will optimize the outcomes of the collection of the portfolio of their decisions, regardless of what the industry is. So I always think in terms of portfolio outcomes, not transactional outcomes. Don't try and get any one decision right. Make sure the collection of your decisions are done right. And that outcome is worthy, has alpha, either literal or figurative alpha. So to me, I would read Blink. I'd read Moneyball, Lewis, which talks about, and by the way, if you want to have great viewing, Michael Lewis and Malcolm Gladwell have a bromance. They have for years. Watch them when they just talk about each other's books that come out, because it is so damn much fun. Kahneman's work, but don't read the whole, try to read the whole thing. You got to read Atlas Shrugged page to page. You don't need to do it once. I've done it 3 times, but third time I was skimming. Just, it was a reminder at that point. I know that's not 10, but those are the most impactful for me.
Oh, Abby had a question. Abby Ludovice had a question.
Oh, I did. I have a question about, we're not appealing to impact investors, but we do have sort of an ESG component. We're plastic free. We're working with sugarcane bioplastic, reducing weight all around. And then we have a non-toxic formulation. And some of the pushback we have gotten during our pitches from like a traditional investor is that, it raises the cost per unit. So who cares? And we believe that our value proposition to the consumer is related to that aspect of the product. And we're at fairly low MOQs because we are a startup. So the cost,
MOQ, what's that?
Minimum order quantity.
Thank you.
So we're doing DTC. So that
what's DTC?
Sorry. Direct to consumer.
Thank you.
So you can make a lot of money on subscriptions with a fairly small list. We're not talking, you need 10 million people to make a lot of money. You can actually make a lot of money on, 20,000 people if you have a very loyal niche, group that believes in what you're doing and wants this product. So that's kind of what our marketing strategy is, and that we're and also our mission, which isn't necessarily impact, but I'm wondering about your thoughts, because you were talking about how to position things so that that resonates. So do you have any thoughts on telling that ESG story?
Absolutely. And what I'm going to do is I'm going to get a link. I did a presentation, a canned educational presentation on this exact topic. And I'm going to pull it up and put it in the box, but it's called How to Find Investors Who Care.
Okay. Yeah.
Because what we do is look at every client story, the business model, the end market, right? All those sort of things. And we find the balance of the messaging to appeal to and attract and secure the right investor, right? Yeah. And that's the recipe, if you will. And then you have to think of process. It's not a one and done. You always have to think of effective outcomes. There's a time element to it. You can't just think, well, you did it once, and why didn't they respond? You're not understanding how people make decisions, all right? And that's why the cadence of communication is critical, as is the content, covering the right information, but context, finding that balance between the business opportunity and the emotional opportunity, all right? So that's what we optimize for our startup clients, but the analytics we extract can appeal to even the most financially motivated buyer. So we broaden the field of view for our clients of who's going to care to optimize for that spectrum of people, because maybe somebody cares is the sugar cane or the sugar operation. It's got all this extra cane. How do we increase our profit margins? They may invest in you, right? Because we take our clients through, and I've got to be able to find quickly from our clients 3 things. Who cares if you're successful? Why you, meaning your business, your team, and why now? What makes this timely now? And it could be as far afield on timing as, well, we just met each other with this expertise came together. That's a legitimate answer. Doesn't have to be some fancy, headline, AI allows us to, no, it can be that simple, but it has to be accurate, true, and succinct in how it's communicated. And there's a way to do that.
So your advice would be that we're probably just pitching the wrong people rather than not telling the right story.
Let me just say broadly defined, I'm certain you're just doing it wrong.
Okay.
I can't tell you which part is wrong, but I'm certain you're just doing it wrong. Okay. By definition. Otherwise, you wouldn't have the problems. Yeah. It's sort of like, again, startups are a bit like ill patients going to a doctor. Says, I don't feel well. And the doctor says, well, what's wrong? He says, well, I just don't feel well. What's the cause of it? Don't know. I just don't feel well. Well, the doctor now has to diagnose it by poking and prodding, gathering data and getting longitudinal data to see was it, and conditional data where, what in your home is causing your ill? Is it mold? Right? You don't know. It's not just something that says, yeah, that's the problem with the medical industry is they treat the symptom and make they go away. That's like telling an entrepreneur, well, this is the pitch deck you need. Now go away. That's horseshit. Right? Same thing. Same problem with medicine as isn't how we fund entrepreneurship. The process is wrong. Okay, I'm going to link the series of educational webinars we have for entrepreneurs. One of them is exactly what, how to find investors who care. So I'm going to grab that. They're all educational. They're all about 20 minutes long. So let's see here. And any investors in here, we've got some for investors, how to invest better, what's better due diligence. Oops, everyone. Hope I did that right. There we go. One of the things, and by the way, one of the things that we've got is, and by the way, I've got another call I could go on for, I'd love to do this again, Bonnie, for your audience. This is fun. I love this.
I'm happy to have you come back. No problem.
Stuff. There's so many things there's so many worthy entrepreneurs that can't get an audience. And that's what continues to drive me. I see it all the time. And I also see the nonsense constantly. That's what I'm constantly reminded of. I was on a panel, actually was on 2 panels on Tuesday. One was a virtual Zoom training for the group operator. It's a accelerator for emerging VC managers. And I've been now taught the last 2 cohorts on risk management, back office stuff, right? Like our TAMP that we've created. And I just see the nonsense that's spewed forth. And then I was on a panel on risk management due diligence at a family office investor conference here in Austin. And the other panelists, well, me and one guy who's exactly my age, really a lovely guy. We really bonded over dinner and what have you. But we're the adults in the room. Everybody else is spewing forth, well, we do it a little bit differently. Really? Well, that you just don't realize just how much risk you just injected in the very process you're now going to try and sell. When you say we, that's the beginning of the end of optimized processes. Because you have ego and bias associated with the very statement of we and the need to differentiate yourself. That's just cognitive bias. Oh God, what's the word? It's the single greatest risk for any investment is confirmation bias. It's the #1 risk. Well, the whole venture and angel model is optimized on confirmation bias. Who else is in the deal? Who's your lead? That's how Theranos pissed away $1 billion for. And that list is long, but that's obvious in the headlines. The venture industry is defined by confirmation bias, and they take pride in it, which is the tell that they don't know what the hell they're doing. I can make any entrepreneur smarter than any investor you're presenting to. I promise you that. I can guarantee it virtually. Now, again, I'm not always 100% right, but the times I'm wrong, that one VC that has a CFA and a KAYA designation has real risk management experience and portfolio experience that's delivered consistent alpha over protracted periods of time by investing in startups. That's where I'm going to be wrong. Now, how many of those are out there? Startups in the C to B are not presenting to those people. Those are the big firms, and they've long since retired anyway. They're so damn rich because they were good. But I can promise you that I can make you smarter than any venture you're pitching, any VC, and angels, forget about it. They're just hobbyists. All due respect to the angel guy that's on here, I respect the journey you're on, but I was early in the band of angels. I saw it there. I was the 9th member of eBay Angels that became 120 strong, seeing 3 deals every 2 weeks at eBay's headquarters in the mid-90s. And these were deals that were vetted by eBay's venture committee that presented to the venture committee during the day, and this angel group sprung up to view them at night while they were in town. So these are pre-vetted deals. I was one of the earliest members of that. The second non-eBay employee, there were 7 eBay employees, all kids with a bunch of eggs. It was like an angel syndicate, right? eBay guys got their IPO dollars sitting around. Hey, let's invest in this cool shit coming through our filter. And I went, oh, Jesus Christ. Because I was a money manager. You take yourself out of the equation to optimize on process, period.
Joe, question. Could you talk briefly about the characteristics of a startup that suits your system?
Yeah, it starts with a commitment to transparency. It's the single greatest due diligence criteria. It sounds like I'm selling my own service, but I'm not. I designed this service based on research to optimize for investors' experience and outcomes. So an entrepreneur that is committed to transparency and is coachable, I don't care what you're doing. Because again, number one determining factor is timing. I can't predict the future, nor can you, by the way, or the VCs out there that claim they can. So that is it. I intentionally don't know what our clients do. I maintain my objectivity because I have investors that say, Joe, tell me about your best deals. And I say, best to me is based on longitudinal analysis on how well they're executing. I don't care what they're working on. I don't care who they are, what they look like. I care how they're doing it. And I can only do that with longitudinal objective analytics. It's how I manage money in the public markets. My firm was the best performing money manager in the United States from 96 through 09 based on absolute and risk adjusted returns. That was confirmed by 2 different independent databases. And I was a stock picker, even though I didn't consider myself a stock picker. The research tool we had to analyze publicly traded companies gave me the ability to push a button on the software and take the name off of and the industry the company was operating in. I was only looking at data. Didn't care who the CEO was or what industry they were in. So that's the rigor. So the optics of what do I like? I like entrepreneurs that execute well. And the only way I can know that is through my own filter. But boy, if you are and you're a client and you're committed to transparency, we're going to make it as easy as possible to find investors and the right investors. Because the right investors need to be rewarded, not the boy band VCs or the kids that are coming out now throwing money at them. And all they're doing is they're syndicate investing and they're just trying to be the cool kids with money. Oh, Jesus Christ.
Joe, can you clarify data for me? Because when you say that, I'm thinking, uh-oh, I'm in trouble. I'm new. We don't have a lot of KPIs to show. We don't have a ton of massive traction. Is that the data you're talking about?
No.
Okay.
I use the word data because most people don't understand from an investment standpoint, the only thing that matters is investable insights. Now, how do you get investable insights? You get data, but the right data in the right context becomes information. The right information, i.e. the 4 data points to blink a Kahneman-esque simple algorithmic decision model, becomes actionable insights. Our platform, our analysis provides actionable insights regardless of the stage of the startup life cycle. Because revenue or not is just a stage of the business. It has nothing to do with right or wrong. There is no right or wrong. It's what's the right information at each stage of the startup life cycle. What's the right metrics? That's all. And the Bell Mason diagnostic was built by, wait for it, Gordon Bell, look him up, inventor of the mini computer, taught computer science at Carnegie Mellon, the first winner of the John Newman Award, which is like the Academy Award or the Nobel Prize for technologists, scientists. They basically did it for him. And then everybody else, if you look. He, after a heart attack, moved out to Silicon Valley in the early 80s and became an active mentor. Saw a lot of interesting ideas, smart technologists, scientists solving real thoughtful problems with real interesting ideas, but they didn't know how to build a business. So he grabbed Heidi Mason, who was a Wharton-educated smart gal consultant that he met when he was at Digital Equipment Corp, and Coopers and Lybrand. And they scientifically architected and back-tested over thousands of companies what is called the Bell Mason diagnostic. Gordon's an investor in my company. The Bell Mason defines everything. So everything that I talk about is all within the construct of the Bell Mason, because Gordon's a shitload smarter than I am. Heidi's a shitload smarter than I am. And Cooper and Lybrand have their own agenda to create the first GAAP equivalent reporting construct, but for private companies when financial statements and GAAP accounting of those financial statements are useless. Entrepreneurs spend most of their time creating balance sheet assets in the earliest stages of the startup life cycle. Those show up as goodwill, brand value, market awareness, IP, the product itself. But that doesn't get captured in the financials. So the financials, Coopers knew this. Gordon knew this. This was done in the late 80s.
I knew
they could find the right metrics at the relevant stage.
I know Gordon.
He's a low. I got to tell a quick story and then I got to go.
Okay.
So I was out there, Gordon, meeting with Gordon on the last time. And after he committed to invest, and trust me, I've met Jimmy Trabig, who founded Tandem Computers, iconic figure. Now Gordon Bell, the founder of the mini computer. Jimmy Trabig is the first fault-tolerant mainframe. I mean, I'm anal about history and iconic figures, and I just learned from them. But Gordon's investing. We're licensed to Bell Mason. We got access to it. He's excited. He said, Joe, what you're doing is what I always had envisioned for the Bell Mason, how it would be applied to optimize tech transfer so you can optimize the both use of cool technology, but do it at scale. in a standardized, repeatable process. He says, come here, I want to show you something. He takes me back to his office, and there's this sort of wood box sitting on his big coffee table around his beautiful, and it's at he's in the penthouse and right on Montgomery Street across from the Trans-American Tower there in San Francisco, and beautiful view. I mean, it's just unbelievable view. He's in his office, it's all windows, and he says, come here, you see that? I'm looking at the view, for Christ's sakes. And you know what that is? I go, no, what is it? And he opens it up. It was an Enigma machine. The German coding that was broken by Turing that changed the trajectory of the war. He had an Enigma machine. The inventor of the mini computer had an Enigma machine right there. Is what it was. I just loved it. So anyway, lovely guy. He is really something. And you talk about, and he's in his late 80s, but he's still thinking of what's next. There's something called Bell's Law. You've heard of Moore's Law about the advancement of computing power. There's Metcalfe's Law around Bob Metcalfe about the power law curve of the power of networks. And there's Bell's Law. There's a new computing platform every decade. And I asked him, well, so what's the newest one? And he says, wearables. That's the next one. You know, think of IoT and that sort of stuff, but and so Bell's Law, I said, is Bell's Law still a praise? Yeah, still, and it's basically the IoT stuff. So anyway, this is a prospect, a startup that was referred to us by a great big rich family office in Florida. So I've got to talk to this startup in 3 minutes about our services. But folks, this was, Bonnie, thank you for giving me an opportunity to just vent. You know, we have office hours ourselves on Zoom. We do exactly what Bonnie does. We invite our clients to come in. We have guests sometimes. Bonnie, you're going to be a guest on ours. But we have it today at 2 o'clock Central. And it's the same format. It's not for us to talk to our clients. It's for our clients to talk to each other. Oh, and network and facilitate. So we will, yep, there you go. Alex, invitation in the chat box. You're all invited. If you want to hear more from our clients, see some crosstalk, bounce off these very same questions off of our clients. You're all invited. And it's every other Thursday, by the way, if you all are interested.
And that's 2 Eastern time?
Central.
That's why I always ask.
Yep. All right. I do got to run now, folks. This was a treat.
Thank you so much, and I'll invite you back again. And I apologize, DC Dubuque, you didn't get a chance to introduce yourself. But we will have Joe back again. And enjoy that cigar, Joe.
I always do. Bye, folks.
And thank you, KettleSpace. Once again, thank you, Brenda.
No worries.
We'll see you all in 2 weeks when the next breakfast is, and it's always posted in the newsletter. Thank you, everybody.
Bye.
Bye.
Thanks. Bye-bye.